Attention, people who still care. How can regular people like us make money by fixing our broken financial system? This is the question we ask on the Crowd Effect podcast. I am your host, Paul Lovejoy, activist investment advisor at Stakeholder Enterprise. On today's show, the stock market is officially in a bull market. Is this run gonna last, or is it just a lot of bull? But before we get into that, I first would like to do a thought experiment. Imagine that you want to buy a car. However, the only place where you can buy a car is in the used car market. Now, I also want you to imagine that you didn't know that you were buying a used car. You didn't know if they were new or used or what have you. You just weren't aware of that. Now, let's say that for some reason you were aware that this was a used car market and you wanted to buy a new car. Imagine there were government regulations making you have financial qualifications in order to buy a new car. And the financial qualifications were that you either have to have $1 million cash in the bank, or you had to have made $200,000 a year for the last 2 years as a single person, or $300,000 a year for the last 2 years as a married couple. And let's say that you were all of a sudden found out that, hey, oh my gosh, I'm buying a used car. I want to get a new car, but I can't. How would that make you feel? You'd probably be really frustrated. Considering that these government regulations were there to protect you because you are not a sophisticated auto buyer. Now, this is kind of an analogy for the stock market. Both a used car market and the stock market are secondary markets. In the stock market, you are buying used shares. Now, this is also called the public market, the stock market. And you're buying shares from somebody else through a broker. It's not new. There are some ways where you can buy new shares, something called an IPO, which stands for initial public offering, but it's still not the first time you can buy shares from a company. This is through the private market, which in my analogy is like new cars. But get this, not only if you are have these financial qualifications, not only could you buy a new car, but you can also design one. Well, that's what it's like in the private market. You are able to shape companies by dictating which companies receive funding and which don't. You also have an ability to talk to the founders and the people in these companies, the founders in these companies, to shape it in a way that you see fit. So this is what's going on right now with investing. There are two markets, a public and a private one. And the private one, you're locked out unless you have those financial qualifications that I mentioned. Those are real. And the regulations are real because the SEC is protecting you because you are not a sophisticated investor. Now, this leads us to our main story of the day, which is the stock market going on a bull run. Now, it seems that the economy has defied predictions by not falling into a recession that we know of, considering sometimes it takes years to know whether we were even in a recession or not. Now, investors also appear to be optimistic, and Wall Street is encouraged that the Fed seems they will not raise interest rates this month, which will be the first time in almost a year. There's also been a resilient job market post-pandemic, which has likely contributed to this bull run. The tech industry is doing all the heavy lifting right now. And companies like Apple, Microsoft, and Alphabet, aka Google, have been crushing it and have made it appear that the stock market is healthy overall. Now, What are the reasons why I think this is a bull market? I think it's a bull market mainly because of investor psychology. So, investor sentiment and behavior play a significant role in the stock market. In some cases, investor psychology can lead to a disconnect between stock prices and underlying economic indicators. Positive sentiment, speculative buying, or herd mentality can push stock prices upward, creating a bull market environment. And this is what I think is happening right now. Mainly because, well, for a number of reasons, largely because it isn't a healthy overall stock market. It's the tech industry it's just one real industry that is doing fantastic, and the rest is still very sluggish. Banks aren't lending a lot of money still. There's a credit crunch, and it's making it incredibly difficult for the backbone of our economy, small businesses, to get any funding. So this will lead me to my financial tip of the day. Become a crowd investor. The only way small businesses can get funding is through banks or through private lending. Now, I mentioned the private market earlier, and private lending is in that private market. Now, this is private lending is wonderful. It stems inflation, being that when you get a loan from a bank, or a small business gets a loan from a bank, well, the bank is allowed to loan money based on the deposits of its account holders. However, the bank doesn't take the money out of your account, and instead is legally allowed to create money to issue that loan. So this is called fractional reserve lending. It's legal. This is how estimates of upwards to 97% of all money is created this way through commercial lending. Now, the private market and private lending, well, there is no money creation. So it helps stem inflation by being a private lender. Now, up until 2015, 2016, the private market was locked out to the general public. But there was Regulation A Plus in 2015 and Regulation Crowdfunding in 2016 that opened up this private market via crowdfunding. So anyone now can get a part of this become a private lender. There are platforms with investment minimums as little as $10 where you, me, anybody can go and participate in. Not only that, you're currently, the private lending market is crushing the stock market. So the financial returns are a lot better. And really in the last 20 years, wealthy accredited investors, these people who have these financial qualifications are allowed to be in the private market. Well, they've been fleeing the stock market for the last 20 years because the returns are sagging in this public market, and there are looking and achieving much better returns in the private market. This is why people go to these hedge funds and these venture capital firms. This is all private market investing, and you have to be an accredited investor to do so. But not anymore. And this is the first time in history where regular people actually have a say in how our economy is shaped, in what types of companies are formed, and being able to profit from being on the ground floor of startup companies. In the past, this was, like I said, accredited investors, but prior to the whole accredited investor thing, it was really the wealthy. And before that, it was kings and queens. They were dictating how, dictators. They were the ones who were saying, okay, this is what gets funding. This doesn't. And it all went back into the kingdom or empire. So this is a really unique time in history where everybody can have a say in how our economy is shaped, and we need that. When we can collect insights and opinions and of a large group that's independent, decentralized, and diverse, well, we're going to make better choices. This is called the wisdom of crowds. And by crowdfunding, by crowd lending, this is how we can make better choices through this wisdom of crowds. I mentioned the $10 minimum investment requirements. Well, this allows regular people to be incredibly diverse. So if you're a crowd lender and you're putting $10 per loan, well, you can be in 100 different loans with just $1,000. Now we're talking that a regular person can have bank level diversification. The stock market, in the end, I don't even really care about the bull or bear market. To me, there really isn't a justification for investing it anymore. Not only are the returns appear to be worse, but the ethical nature of the stock market is one that encourages corporate bottom line investing. It encourages outsourcing. It encourages U.S. companies manufacturing in authoritarian controlled countries like China, all of which contribute to income inequality. This is why I have created the Ethical Investor Program with my company to be able to invest in the private market, give guidance on how to invest in the private market, and provide investment strategies for regular people that's easy to understand. There's no complicated nature that's going in the stock market, and we can fund companies that have been overlooked in the past. We can fund small businesses that are desperate for funding right now, and we can provide that funding without creating inflation. My name is Paul Lovejoy. I am a crowd investor, and I see you are one too. If you'd like to know the 3 secrets to make money by fixing our broken financial system, go to stakeholderenterprise.com.